And look, you probably think your bank account is a digital vault. You think there's a little virtual box with your name on it somewhere and your money is sitting inside, waiting for you to swipe your debit card. Well, no, that's a lie. The moment you deposit $1 into a U.S. bank, that money is no longer your property. Legally, it becomes the bank's property. And what you get in return is an IOU. You become an unsecured creditor to a business that is currently gambling with 10x leverage on bonds and commercial real estate that are underwater. And right now, the math isn't looking good for the house. U.S. banks are currently sitting on roughly $480 billion in unrealized losses. That means they made bad bets. They lost the money, but they haven't admitted it yet because they haven't sold the assets. And the safety net, the FDIC insurance fund, it has about $150 billion in it. So do the math. $480 billion in losses, $150 billion in insurance. That is like trying to put out a forest fire with a squirt gun. And in this video, I'm going to show you the date your bank account could legally go to zero. I'm going to show you the bail-in laws that allow them to use your savings to save their bank. And then I'm going to show you how to move your money out of the kill zone and into the only place the banks can't touch it. Let's look at the receipts, because most people think 2008 was the end of the banking crisis. Wrong. 2008 was the start of the new rules. You see, before 2020, banks had to keep a certain percentage of your cash in reserve. They had to keep some powder dry. But in 2020, the Fed quietly changed the rules. Reserve requirements went to zero. That means for every dollar you deposit, the bank can legally lend out every single penny. They are leveraging your life savings to make bets for their profit. So here's the counter move. You need to do exactly what they are doing. You need to leverage their capital before they cut you off. You see, right now, there is a window to access unsecured liquidity, capital that doesn't put your home equity at risk. We call it loophole capital. It's often at 0% interest. If you go to loopholelending.com, you can see exactly how much of their money you can access right now. Get the capital out of their system and into your control. Use their money to build your war chest instead of letting them use your war chest to pay their bonuses. Because here is what happens next. They take your cash and they buy long-term treasury bonds paying 1%. Then inflation hits, interest rates go up, and those bonds crash in value. That is exactly what killed Silicon Valley Bank. It wasn't a robbery, it was math. But here's the part that should terrify you. Well, at least cause you to seriously pause. You see, when Silicon Valley Bank failed, the government stepped in and saved everyone. Why? Because the depositors were tech billionaires and startups. They were systemically important. But just a few months ago, a small bank in Oklahoma failed, the First National Bank of Lindsay. And guess what happened to the people who had more than $250,000 in their accounts? They got a letter saying, sorry, you might not get this back. They were forced to take a haircut because they weren't important enough to save. So the rule book on paper and the rule book in real life are two different things. Here's the easiest way to picture this. Imagine your bank is the school cafeteria. You hand the lunch lady $20. You assume she puts it in an envelope with your name on it. She doesn't. She tosses it into one big bucket with everyone else's money. Then she takes that bucket and goes to the casino to play slots. The computer says you have $20, but the actual $20 is gone. If one kid asks for a refund, she pays him with the next kid's money. But if every kid shows up at the same time asking for their money, the cafeteria is empty. And the insurance fund, that's like the principal having a jar of quarters in his office. It can cover a few missing lunch monies. It cannot cover the entire school demanding a refund on the same day. That is the U.S. banking system, just with bigger numbers and nicer suits. So what does this mean for you? It means you cannot treat a bank balance as safe money. You have to treat it for what it is, a high-risk loan you are making to a hedge fund. If you have less than $250,000 in the bank, hey, you're probably fine. The government's going to print the money to save the little guy because they don't want riots. But if you have more than that, or if you run a business with payroll, or if you just sold a house and parked the cash there, you are in the shock absorber category. There are laws on the books right now, specifically from the Dodd-Frank Act, that allow for bail-ins. You see, a bailout is when the taxpayer saves the bank. A bail-in is when the depositor saves the bank. You see, they can legally convert your deposits into bank equity. Translation: congratulations, you are no longer a customer, you are now an involuntary shareholder in a bankrupt company. So here's your stock. It is worth zero. This isn't theory. They did it in Cyprus in 2013. They took money directly out of people's accounts to recapitalize the banks. And that same legal framework exists right here in the US. Now, I know what you're thinking. Matt, this sounds like doom mongering. No, doom is an emotion. This is just math. And the math says the system is insolvent. Ignoring the math doesn't make you safe. It makes you a victim. The regulators, they'll tell you the system is sound, just like they told you inflation was transitory, just like they told you that the housing market was rock solid in 2007. So there are two ways to play this. Option one, you just cross your fingers and you hope your bank isn't the one holding the toxic bonds. You hope the FDIC prints enough money to cover the hole. Option two, active defense. You stop treating the bank like a vault and start treating it like a utility. First, you compartmentalize. If you must hold cash, never let a single account breach that $250,000 limit. Spread it across multiple banks, too. Make the government insure every single dollar. Do not give them an excuse to give you a haircut like they did in Oklahoma. Second, you minimize. You keep enough cash in the system to pay the bills for a few months and maybe some reserves for emergencies. That is your operating capital. That's necessary. But your real capital, your war chest, that does not belong in a digital IOU. You need to move that money into assets that have no counterparty risk. If you own a rental property and the bank fails, you still own the house. The tenant still pays rent. The asset is physically yours. It is not a line item on a bank's balance sheet. If you own gold, physical, not paper, and the bank fails, you still hold the gold. The professionals don't keep millions in a savings account earning 0.5%. They know that cash is trash. They keep their buying power in hard assets and use the bank only to move liquidity from point A to point B. So here's the question you need to ask yourself today. If you logged in tomorrow morning and the screen said, account frozen, regulatory action pending, how long could you survive? If the answer is, I'd be ruined, then you're too exposed. You have trusted a system that was designed to use your money to gamble. You need to build a financial war chest that sits outside of the banking risk zone. But you can't just stuff cash in a mattress. Inflation would eat that too. You need assets that flow cash, that hedge inflation, and are legally titled to you. Now, I know the immediate objection. You're thinking, Matt, I've got a career. I don't have time to become a real estate mogul. That is amateur thinking. You don't need to quit your job to protect your wealth. In fact, your W-2 income is actually the biggest leverage point you have to secure the loans for these assets. And that's why I pulled this video out here for you to watch next. It breaks down the specific roadmap for full-time professionals to acquire their first income property without sacrificing their career or their weekends. You'll see exactly how to turn your paycheck into a permanent defense shield in this one right here. So click that, and then I'll show you how the pros do it.